Hello, hello. Just want to say so appreciative about our connection. And I want to talk today about the 6 mistakes to avoid when sharing new rates with your clients. This isn't necessarily with the new clients coming into you. This is with your legacy clients also, if you want to go ahead and raise your fees with them. I'm Lauren Fogelman with Business Success Solution. And I realize that whether you're a solo firm owner or you're part of a larger firm, it is a gap between when you first start thinking about raising your rates and you actually do it. But when you decide that it's actually time to make it happen, you're ready to take action, I want to share with you some mistakes to avoid when you start making this happen in order to have more success. And this applies once again to all people, whether it's new people coming into your firm or with raising your rates with your current and especially the legacy clients. So the very first one is defensive. That means that there might be someone that's going to complain to you about your new rates. There are people that will absolutely do that. You probably know who they are. And don't take it personally. Don't be too attached to their upset. And that is because if you find that you end up getting defensive, then it changes your mindset about things. You start to question things. Maybe you cave in, and it only makes matters worse when you're getting defensive about the fees that you're charging for your services, especially if you're increasing them with a current client. Number 2 is going to be expectations. And just let's agree that your current clients, the ones who are headaches, the ones who are price sensitive, they always question everything. They will complain to you and share their frustrations with you openly. It is going to happen. And this is why I want you to take the higher road. I don't want you to apologize or waver on your decision. You have to connect with your value before you can expect someone else to recognize the value that you offer. Number 3 is take that high road. And this is where you want to be very mindful about how you respond to someone, and especially when they are questioning a rate increase, because the way that you respond might be the decision between whether they remain with you or whether they decide to move on. And that means that, yes, you have some influence over the choice that they make. So once again, connect with your value. Do not cave into the pressure. And don't be attached to their yes and no. Just give them the options. And if they decide to move on, then that is a choice that they've made. The 4th thing is your cost. Let's face it, sometimes you feel like you ought to justify a fee increase. However, talking about your increased fees yourself, the cost of doing business, the economy, it does not matter to your clients. They don't really care that that's a reality that you're experiencing. The truth is, they're facing certain realities also, and they care more about the impact to them than the impact to you. So they're not concerned about your profit margin or why you're doing a rate increase. Don't get defensive and feel like you need to justify it. If you want to give them a reason why, let them know, because you're being more client-centered and you're looking at how to continue adding value to the clients who you are working closely with. The next one is attrition. This is number 5. Once you raise your rates, about 10 to 20% of your clients will probably leave. Now, I've seen where 100% stayed because they followed the system, they knew exactly what to do, they were able to focus exactly on the value and the benefits to the client. But overall, research shows that if you go ahead and raise your rates, about maybe 18% is really what the research shows will go ahead and leave. So don't let that be a surprise to you, like, why is this happening? And then you start second guessing or lowering your fees because now it's fear-based. What we want to do is recognize that the ones who leave are typically the ones who complain the most, and they're very price sensitive. So this is more of maybe fine-tuning your client list so you're working with higher quality clients, and the headache ones, they naturally go away. The other thing to consider with this is if you're going ahead and doing a rate increase and maybe you're having that 10 to 20% attrition with your list, then overall, you ought to still be earning as much revenue, if not more, but it's reducing your workload. So that is something to think about as well. And the last thing is raising your rates, especially with your legacy clients, is a good thing. Let's face it, if there's some attrition, then go ahead and realize you've just opened a capacity to either work more closely with your current clients to take on a new project that you didn't have the capacity for, or maybe to finally replace one of those low value headache clients with someone who is quality client. They respect you. They want to be able to invest in your services because they see the benefits of doing that. So those are the 6 mistakes to avoid: is getting defensive, being aware of and having expectations that some people will maybe push back a little bit. Go ahead and take the high road. Number 4 is don't use your course as a justification for raising your fees. Number 5 is there will be attrition. And number 6 is if the headache clients or the low value clients leave, then that is a good thing. If you want to go ahead and figure out how to be able to implement this, then join my training on Wednesday, January 10th. It's how firm owners price with confidence to earn more and work less. That's January 10th. It's at businesssuccesssolution.com/owner. I'll go ahead and put the link below as well. Once again, businesssuccesssolution.com/owner. Would love to hear what you took away from this, what this validates, how you're going to go ahead and have that fee increase with everybody, not just the new clients, but with your legacy clients as well. Once again, I appreciate our connection. Lauren Fogelman, Business Success Solution, showing accounting professionals how to double their income working half the time.